All right, everyone. So first we'll go over a lesson, then we'll start looking at some markets. I'll show some opportunities. All right. So the first thing is this one of the mistakes that a lot of the day traders make is they immediately jump to a 5-minute time frame or some lower time frame, minute based, tick based, without having an understanding of what the direction is, because the lower time frames actually they have misinformation. Um, you might see a rally that isn't a rally. You might see a trend that isn't a trend. You might see a pullback that isn't a pullback. So without putting it into context, it is absolutely pointless. There are just too many errors. A change of behavior in a lower time frame is not a change of behavior unless you have some idea of what causes a change of behavior and or a sign of strength, sign of weakness. So these are important things to learn. And to put everything in perspective, you have to start off on the daily. Why? Because the important thing here are daily levels have this. I just call it orders, all right? Orders lead to reactions, lead to all right. So daily or orders lead to reactions, lead to lower time frame trends. So what do I mean by that? As soon as on the daily, right? As soon as it goes here, chances are there's going to be a reaction. All right. Then when it does this, there's going to be a reaction. The reactions I, right? So these reactions are being caused by orders. All right, the orders here, there's orders here, there's orders here, there are orders there, they're buy and sell orders. Call it liquidity, call it stops, call it whatever. There are orders here. All right, these orders create these reactions: down, up, up, and this one. All right, so these orders here, they create the reactions, the buy sell orders, because there are large orders there and there's someone on the other side and all of that. So basically that creates reactions. Those reactions turn into lower time frame trends. All right, that's what happens. So for example, this is the daily on the lower time frames. what's going on here is you'll get that. So at this point, you'll get these reactions on the lower time frame. That little swing pullback becomes a trend on the lower time frame. And this is easily visible. For example, let's say this is the daily. This will be your, let's say hourly. You'll be able to see it definitely in the hourly. All right. Now, that reaction on the hourly from the daily, that reaction or trend in the hourly becomes tradable intraday. All right. So first, the reaction occurs from the daily. The reaction is visible as a trend on the hourly, and the hourly allows you entry points on shorter time frame to take the trade in that direction of that reaction, which is the direction of this downtrend right here that's forming. Anyway, enough of this. Let me just show you an example. Get it. So this is Bitcoin right here, right? Let me get the daily. Okay, now I switched the layout to daily over here. We have Bitcoin. This is Bitcoin market right here. Notice this. This low is 91,735. This low is just a little bit below that. All right, you see this low? This dip to 91,300. Again, this low is 91,735. This low is practically within that same ATR here. Little dip, little bit lower, 91,300. There are orders there. It hit those orders. So on the daily, it goes to these levels, taps them, and then this is where the orders create the reactions. This is where you have the reactions that are visible, and enough of a reaction to create the intraday, a nice intraday trend, not like a little wiggle, because you need the daily. The daily, that's where the reactions are, because those are the big orders, right? The bigger, stronger, more orders, more levels create better reaction. All right. So those are the levels that are important. These other levels, they are not. They're less in play than these levels, which then you use on the lower time frame. So anyway, this is the daily. You see the tap right here on Bitcoin, right? This is very recent. Last trading day, right there. Just Friday. So 91,735 basically retests it, 91,300. Okay, now watch. I'm going to bring up the hourly. Now I switched to the hourly from the daily. I switched to the hourly. Here's that level. Look at what happened. Look at what happened. You see? You see what happened? This was the prior low, right? 91 some whatever. It's 91,735. It tapped it here, right? And then boom. Look at what happened. You see? Green, 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 green. How many green bars in a row on the hourly? How many hours? How many green bars? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 green bars. 13 bars in a row. 13 bars, same color in a row. Bank. All right. So we saw the daily levels are the real levels where you have big orders that create the reactions. What are those reactions? This shit right here. This is the reaction off of the daily level. This reaction is now turning into a trend. Okay, so daily level reactions come from that. Then that reaction becomes a trend. Okay, how does it look? I'm showing you in your face how it looks. This is the reaction off of that level. That level was here, 91,735. It got just tapped at 91,300, right? As it got tapped, the reaction came. That reaction creates trends. So the question is, one, how are trends created? How are they birthed? How do they come to being? And one answer is that liquidity, or call it orders or whatever, right? It's those large orders that create reactions. Those reactions can birth trends. So this thing has a chance of creating an uptrend now, because you have the reaction, high takes out prior high, higher low, and higher high right there. That is your change of behavior or your sign of strength. That is how it occurs. So we saw this hourly reaction and becoming a trend against the daily levels. The daily levels have enough juice where they can birth the trend, a reliable trend. And this happens on both the upside and the downside. Meaning you have up and down trends against these levels. Because the key question when these support and resistance come into play is this: will it break through this time? Will it break through this time? Whether it's on the upside or the downside, will it break through this time? All right, these levels are extremely important, and these are the real key levels that are in play or tested or whatever. All right, this is very important because they set up the reactions which become the trends, especially intraday and daily, basically 1 to 3 days, sometimes 5-day trends that can be used for trading, short-term trading against with lower time frames using the daily levels. So so now that it's at 60 minute, so what do you think? 60 minute, you use like now an intraday 5-minute or some tick-based chart to see whether there's a pullback entry, and then you'll be able to milk this, right? We want to see this pullback, see it hold, see supply dwindle, see the reversal on a 5-minute or a tick-based chart, and then enter that on the long side. All right, because the reaction here is bullish. Okay. Anyway, so this is how it's done. This is how it's really done. Not 50% level or whatever, right? And now I'll show you. This is not just on the short side, the long side. The short side here, reacted right there, and it reacted again here. Boom. See, long to the short, back into long. Show 1 second. Let me show it with the daily so you'll see the perspective. All right, so this is shitcoin or Bitcoin, right? Now you're gonna see the daily and hourly. This is good. Daily and hourly work well, but you can use tick-based charts as well. But the key is that the juice, the orders on the daily. That's what makes it happen. It's not the same as other time frames. All right, daily's the key. All right, so and you're gonna see this happen. Watch. And this is no, I'm not typing or anything. This is right here. See this shit? Right here, right? 95. When it reversed off of 91,735, right there. Let me copy this. Copy one. Right? This is a reaction, or a change of behavior reaction, or a sign of strength reaction, whatever you want to call it in your Wyckoff, or demand, right? So why is this important? Because when we look at the chart, we see that the level was 93,335, right? That is your level. Now, as it approaches that level, the question is it going to break through this time? Is it going to break through, yes or no? All right. So when it tries to break through 93,335, which is a daily level, not no 15-minute level. This is a significant daily level, which is used by larger traders. That's where they have their orders, right? So 93,335, is it going to break through this time? What's the answer? Does this look like it's going to break through to the downside below 93,335? Does 1, 2, 3, a higher high with volume look like it's going to break through? No. It's going the other way. It's not breaking through. In fact, it's reversing. It's rejecting. Instead of sellers breaking through, buyers are coming in. Instead of sellers breaking 93,335, as the price goes to 91,735, buyers are stepping in instead of sellers breaking through. It's also visible on OBV, right? OBV is very clear. Tries to break and bing, 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 bing. It's all bought up. Right there. Anyway, so now it's going to go. Now what are you going to do? It's going to go to resistance, right? So we see that the level here is 100,975, right? Okay, so let's see how it behaves when it goes to 975, 100K, 975, 100,000, 975. As it goes through, right, it breaks, and then bingo, the biggest selling wave in 48 waves. Does that thing look like it's breaking through with follow through, or does that attempt to break through is accompanied by a rejection. That's your rejection, that's your reaction. That's what creates trends. That's what creates trends, right? Now we're going down. So now the low was 91,735. We're going to that low. What's the question? Are we going to break through or are we going to reject? Right? Are we going to break through or are we going to reject? Ding-a-ling-a-ling-a-ling. Keep going down. And as it attempts to break through 91,735, right? As it attempts to break through, what happens? Does it break through or does it reject? It rejects to the upside with volume, with 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 plus green bars. Now we are going up because it doesn't want to break through. It doesn't want to break through. So now we're going to see if how high it can go. But a logical step would be to say, is it going to break through again at 103,685? Right? The question is it going to break through or reject? And the next level of resistance is 103,685. So is it going to break through? Let's see. It's on its way there. Right? Okay. Maybe you want more examples. All right. Let's do more examples. So we'll take a look at 106. I don't know what this shit is. 106,305. All right. Let's go all the way back there to 106,305. Where the hell that is, right? 106. Okay, is this it? Well, I went to 106.35. I'm not sure why. I'm using the 60-minute and it only shows 105.325. Doesn't matter. It has to do with the intraday data and, considering that. When you consider that versus just end of day. Anyway, it doesn't matter. This is the level. All right, 106,305 daily level, not a week level, a daily support or resistance level. All right, let's try to crack through. All right, it's going to go to it. As it goes to it, what is the question? Is it going to break through or is it going to reject? That's the fundamental question. 106,305 right here. This one, 106,305. Now let's go to it. All right, let's go. And it hits it right here. It hits it right here. All right, it hits it in this bar, and now we want to see what happens. This is what happens. Biggest selling wave in 16 waves. As 106,305 attempted to break through, someone either took profits or someone started selling or whatever. It's selling. This is a reaction. As price went to 106,305 and tried to break through, there is a reaction. There is selling. There is a sign of weakness. There is a change of behavior. There is supply right there. Followed by low volume pullback. And that initiates the trend on lower time frame going down, 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 down. And when it goes below 95,620, that's right here, 95,620, our question is it gonna break through or will it reject? Right? All right, so we wait. It goes right here. It breaks 95,620. When it goes to 93,335, I think, 93,335, what happens? As it breaks, which the break is right here, 95,620, as it breaks, right there, is it going to break through or will it reject? That is a rejection. Why? Green, 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 with the biggest volume in 10 up waves, a clear indication of demand. Right there. Right there. Marked. C-O-B. I could call it demand, I could call it whatever, but there it is. And now, price goes up. Now you can't predict exactly where the high is going to go, where the target's going to be. In this case, it only, just pulled back and just made one higher high. So you can't, you can't predict how high it's going to go. Is it going to reattempt 109,940? Maybe. That seems logical. Why? Because it rejected 95,620 with all this demand coming in, telling you price is going to reattempt something, right? But you can't say for sure whether it's going to go straight to 109,940 or is it going to retest and create some more liquidity or orders up and down. In this case, it pulled back and it just took out the high right here, giving you the rally, right? And remember, this is an hourly chart, so there's a lot of money to be made from an intraday perspective. If you catch it right here, this is a lot of, how many 100 points is this? 93 to 99, so that's a lot. On an intraday basis, that's a lot. So now what it did was, since it didn't take out the high, it's retesting. Okay, let it retest. What's the question? Is it going to break through or reject? Every single time, if you learn anything from this, it's to use daily support and resistance and ask this question. Is it going to break through or reject? And if it rejects, which as you can see how many times it rejects, it will offer wonderful trading opportunities. And those are the shorter term trading opportunities, either intraday or the smaller 1 to 3 day to 5 day, that type of trading opportunity. Or it's a way to get into the market to ride a massive trend. By massive, I mean basically using the shorter time frames to ride a daily trend, right? So that's a very low risk with a very big reward, right? So anyway, so this was the, 93.35, and now it cracks 93.35. Question. You know the question. What's the question? As it attempts to break, will it break through or will it reject? Answer was rejection. Ding, 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 goes up, 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 and away. Now we're going to attempt the first levels of resistance, which is 1,975, crack it, and sell, right? And then it goes right back to support, and it's ding-donging here, and we have our next buy. You see? You see the way the ranges and the support and resistance from the daily are setting up reactions. Those reactions are your sign of strength and sign of weakness, or your changes of behavior that create short-term trends. those short-term trends are very, very tradable. Very tradable. All right. Now, not every reaction is tradable. Like over here, this reaction, right? This didn't offer me a pullback. Can't do it. But this did. This did. This little move here, I forget what it was. Was it $3,000? I forgot what it was. But this little move here is significant. All right, this little move. All right. Now this didn't pull back, but this gave a very nice pullback and entry right there. This one gave a very nice pullback. And if you got in here, it's like, look at the, look at the opportunity. This one gave a very deep pullback. And moved, right? This one here didn't give a deep pullback. Maybe you got in afterwards right here. Where's the next one? Oh, that's it. Anyway, in this lesson, the key takeaway is you gotta use the daily levels. This is for trend trading. I'm not talking about scalping. If you're scalping, this totally different thing. But trend trading and intraday trend trading and day trading and all that trends. The daily support and resistance levels and that key question I asked, that really frames everything. All right, and maybe I'll look at one other market, but maybe I'll do it in the next video. All right, take care. Thank you. Bye-bye. Have a good weekend.